What's good, everybody? It's Wendell from Spektrades. I hope everybody been having a great day and a overall great trading week. In this video, I have a special video for you guys. This is a 15-minute New York session strategy. I got two examples at the end of this video, but this strategy is one of the most powerful trading strategies. But without further ado, let's get straight into this video. Let's get into the first 15-minute New York candle. The time frames is from 9:30 to 9:45 a.m. Eastern Standard Time. This is when the first 30 minutes, right when market opens. This candle often shows where smart money is hiding orders, right? Because this is like the first 30 minutes. So price gotta automatically extend, right? It also gives a clue if we're about to expand or reverse. Some common behaviors if for price to quickly wick up or down to induce traders. A strong body, right? A strong candlestick body equals commitment, and then a narrow candlestick body, right? That right there indicates that a trap or a consolidation zone is coming, right? Let me explain that. So we see price left this prior old high right here. Then we see that 9:30 a.m. candle extend higher, right? It opens up higher first to clear that old high right here, so then extend lower and then close and give us a full body order block. But the first 15-minute wick like gives us the best clue, I'll say. Like it literally kind of gives us like the main directional bias, right? Because if price clears this high and give us this market structure shift, we know that price wants to go lower now, right? It gives us the trend of direction, right? Because if price goes higher and give us a full body break of here, right, a full body break of structure, this is gonna indicate that we want to continue this uptrend, right? And now we're gonna know that price wants to extend higher. That first 15-minute candlestick is extremely powerful. Let's get into 3 ways to read the New York candle, right? The first thing we have to look for is a impulse breakout. A strong candle plus break of structures equals possible trending days. We look for fair value gaps / order blocks inside of these candles. The second is our inducement trap. The first 15 minutes sweeps highs or lows, like I stated before, either the prior daily or a prior session high or low. Then it quickly reverses hard. Then we look for our liquidity sweep plus our change of character. We can also label it a market structure shift also after this liquidity sweep. And then we have our rejection wicks, large candlestick wicks. Those equal order absorptions, right? We have our entry after price returns to the fair value gap / the order blocks at the wick of the base. As you can see right here, this is one of our schematics, and then this is another one. So we see after price rallies lower and gives us that liquidity sweep, right, that inducement trap after price sweeps an old low or an old high, and then give us this market structure shift. Price leaves, right, after this impulse breakout, price leave, just like I stated, inside of this candle, a order block, or it will be a fair value gap. As you can see right here, price pulls back and clear this inducement trap, mitigates this 15-minute order block to then extend higher to distribute. This is another model right here during the New York session. What we see price push down and tap inside of this demand level and leaves a rejection wick, right? This rejection order blocks is probably one of the best order blocks, I'll say, because once price reject, like a lot of people, they won't guess the rejection order block. That's the main reason it's so powerful, right? Because price is gonna push down extremely strong to take out all these internal range lows. So a lot of people are gonna think that the sales has started, right? So, but it's actually just pushing down to the extreme to mitigate this rejection block and then extend higher to clear prior old highs right here. But this right here is just 3 ways to read the New York candle, right? A quick pro tip is to backtest the New York open. Like go on your charts and backtest from 9:30 to 9:45. Backtest how the New York opens, right? You're gonna see a lot of the patterns just gonna start occurring more and more the more you backtest it, right? Because like from 9:30 to 9:45, it's like a fast volatile switch that kicks in. The volatility kick in, the institutions are trading. It's like a lot of movement happens in the markets, and if you position yourself like I'm going to show you in this video, you're going to catch some of the best beautiful trades. Let's get into the strategy to use, right? This is the strategy for the New York reaction model. The first step is the pre-session before 9:30 open, right? Something that I always do is mark my London highs or my London lows and sometimes the Asian highs and lows, right? The Asian session provides a clear point of liquidity, so I always mark out my Asian highs and lows also. And then I note higher time frame bias and the higher time frame point of interest. So it's like I always do a top-down analysis. I start from the higher time frames, the 4 hour, then scale down to the 1 hour, then the 15 minutes, and then I execute on the lower time frames. But you always do a higher time frame. You have a higher time frame bias, and then scale down and find your higher time frame point of interest. And then for the second step is from 9:30 to 9:45 a.m. You watch that first candlestick like a hawk, right? You always, like me personally, I trade live with the students. So from 9:30 to 9:45, I'm watching what is the 9:30 candlestick gonna do, because it's a manipulation candlestick. Is it gonna grab liquidity? Is it gonna give us a breakup structure? Or if price trapping, right, staying inside of a consolidation range, like it is not going anywhere? I ask myself all these questions once I'm looking at it, right? And then from 9:45 and up, I wait for a retrace inside of a order block or a fair value gap from the New York Open, and then I just find me a confirmation entry on the 5 minutes, like a 5-minute trend character on a pullback, like an inversion fair value gap or a order block, something, right, that just shouts like, window, take this trade, right? Or I just wait for a breakup structure, and on that pullback I get that RTO entry. I'm gonna show you 2 examples, right, on how you can execute it, but it's a lot of ways that the model is gonna show it, but it's the exact same thing, right? The more you practice it, right, you have to put in the work though. You have to go on your charts and back test it, just so when like the different ways it appears, you could just be right there with it and you know exactly what it is. And then a bonus tip, right? A bonus tip is to avoid trading during the candle, right? Like, don't trade the first 15 minutes, I'll say. Wait for that candlestick to close, just so you can see, is it gonna give you like a liquidity sweep, a breakup structure, or like is it gonna trap you, right? Never just be in a haste mindset when you look for setups. Like, don't go on the charts looking to make money. Let the markets like play around and show you its hand, and let the models form, and on that pullback, right, then we can execute, right? Like for this quick model right here, right, this was a beautiful trade. We see price push down lower and give us a liquidity sweep of these relative lows to then give us this market structure shift. On this curve right here, on this uptrend curve, price been mitigating all these order blocks. Pulled back, mitigate this order block, extend higher, pulled back and mitigate this order block, and then extend higher. But this was the last one, this 5-minute order block, right? That's when price pulled back, cleared that internal range low to then extend higher here and give us that full body breakup structure. It wasn't even like until this pullback, right, this last one right here, where price just pulled back and cleared this order block, to then we started getting this crazy extension right here. But you kind of see that, like, even before, right, even before, after that that 9:30, right, open right here, we still waited, right? You have to wait until the model forms, until we start getting our market structure shift, until we see like a clean zone that is unmitigated, until we'll place our trade and wait for that pullback. It's so mechanical, right? And we also know your take profits, where you planning to get out at, right? So you don't get greedy, right? These models, they work extremely well. It's just when you work with a trading plan and you just follow the rules, right? So make sure you watch the my previous video also on the trading plan, and just follow those rules, follow those steps. I hope this video is providing a lot of value. Let's hop on the charts and go over these examples live in action. Now on our charts, I'm gonna go over the New York session strategy on GBP/USD, and I'm gonna start my top down analysis on the 1 hour, and I'm gonna scale down on the lower time frames and show you exactly how I execute. So the first thing we're looking for, right, on the higher time frames is to just mark out our trend and where did price come from, right? So we see price extend higher and break through this old hourly high, right? We got a full body breakup structure. This is indicating that we are in a uptrend, as you can see right here, when price is breaking prior old high inside of this new dealing range, from this old low to this old high, right? We see price pull back, but leaves this internal range lows right here. A lot of the volume inside of these fair value gap lies in the 50%, right, of these fair value gaps. So whenever we see price build a pool of liquidity, right? If you ever hear somebody talk about a pool of liquidity, this is what they're mean right here. So this makes this a inducement, as you can see right here. So we see price push down lower and clear that inducement, and now price is playing inside of this 50% of this hourly fair value gap right before the 9:30, right? Just like I stated, 9:30 is when the market's open. So from 9 a.m., right, I usually put my arrays from 9 to around 1 p.m. This is the whole morning session. So let's go down on the 15 minutes time frames to see even more price action. And now that I'm on the 15 minutes, we see price also leaves this Asian range as our pool of liquidity lows. So price is actually pushing down lower to clear the Asian lows to then mitigate the 50% of this hourly fair value gap to then extend higher. So we see right on that 9:30, like I stated, that 9:30 or that 9:45, like what is it doing? So we see that price push down and give us a second liquidity sweep of these old lows right here. As you can see, boom, these old lows got a second liquidity sweep. So once price right at that 9:30, right, price extend lower, 9:15, 9:30, right around this range, price push down, give us that second liquidity sweep to then extend higher and give us a clean displacement right here. This right here is just giving us a new dealing range. So price gives us this higher time frame liquidity sweep inside of this hourly zone, and then we get our New York, just like I stated, that 15-minute sweep, that 15-minute open sweep. You always pay attention to that right there, right? That's one of the keys. So pay attention to that New York opening manipulation or expansion, right? To then we get this new dealing range from these lows to these old highs right here. But how do we take this trade, right? How do you take this trade? Zooming in a little bit, right? You can see that price leaves a couple zones. You may say this fair value gap or this recent order block. All right, price may just retest this. But me personally, what I kind of want to see is for price to come back inside of a discount array. I'm going to grab my gain box from the low to these old highs right here, right? Anything inside of this discount is perfect to buy, right? And anything up here is perfect to sell. So inside of this discount, one of the best zones that I see here is this inverse fair value gap, right? It's right in between our equilibrium. I'm gonna remove this just so you can see it a little bit better, but it's right inside of, or like right between our equilibrium, this inversion fair value gap. This fair value gap was supposed to hold to continue this sell trend, right? Because we see price pull back, mitigate, and then extend lower. So price was supposed to come inside of this fair value gap to then continue this sell trend. But price violates this fair value gap. So we classify this as a inversion fair value gap. So I'm gonna remove this right here. So if you're like a day trader, right, and you like the 15-minute time frame, you can just place your trade at this fair value gap open and your stop loss at the candlestick wick. And I'm targeting this old high as my first take profit and this other old high right here as my final take profit. Because you got to realize this is where the trend started. From here, price pushed down all the way here. So once we mitigated our higher time frame zone, where is price likely to go? It's likely to go here and here. Price came right inside of this, right? The open of the fair value gap, the inversion. Let's extend it. A retest of that same open. This trade ended up playing way later. You would have to hold this trade right here for it to see the full take profit. Let me remove this indicator. This indicator is called a range box by nephew Sam. This is the settings for it. This is just an Asian range indicator that I use. But yeah, like this trade ended up playing for way longer, right? But for me personally, I always advise to take profits at old highs. So you could have made this, right? This other high right here. This is your other zone, or just that original extension right here. All of these right here are feasible take profits, right? You take profit here, take profit here, you take profit here, and you take profit here, right? You get multiple take profits, multiple ways to take your trades. But all of it is happening between 9 to around 1 p.m., right? This is the whole New York session. But where I'm waiting for this, is that first 15-minute candlestick that's going to give me the whole trend. It's going to give me the whole bias of what that New York session is going to do. That's why it's so important to be on the markets before 9:30, right? Just so you can make a full analysis and just see if it plays out during the New York session. Let's get into this example right here. Just like I stated, the first thing I usually do is my top-down analysis, right? As you can see, price just been playing inside of this range, but price dropped crazy yesterday, right? The other day, I'll say, right? Because I actually took this trade live. I'm gonna bring the screenshots. But the other day, right, price had dropped crazy after we mitigated this rejection block, right? But a drop in a bullish market is just in a hunt for sell stops. Price was just clearing all these old lows right here to mitigate this hourly fair value gap, this hourly zone. So after price mitigates this hourly fair value gap, as you can see here, we had a crazy manipulation, right? A London manipulation of these old lows right here. Let's get down on the 15-minute time frames. So on the 15 minutes, right, just like I said, this is the Asian session right here. So during the Asian session, this was our beautiful session power of 3, right? Price gave us a Asian session accumulation. And then during the London session close, price pushed down lower and give us a manipulation of these old lows right here. And just like I stated, right, pay attention to the first 15 minutes of the New York session open. As you can see right here, the first 30 minutes is the 930 sweep. I'm gonna bring this just so it can be on right on 930, so we can see that low. But as you can see here, right, price had pushed down and cleared this old low right here and then extend higher and left us this 30-minute inversion fair value gap. Let's go on to 30 minutes. So on the 30 minutes, what we seen here, this was a fair value gap that was supposed to hold to then push down lower. But once this 30-minute candle broke right through it, it has become a inverse. And price leaves this 30-minute fair value gap right here. So we already cleared this pool of liquidity and then got a clean displacement. Where, like ask yourself these questions: where would price likely target next? Once we clear this pool of liquidity, price want to clear these old highs and come and fill this fair value gap. So let's get back down to the 15-minute time frames. So on the 15 minutes, right, now that I got my zone, right, this zone may be too big, right? Since I'm trading NASDAQ, this is like 68 points, 64 points. I like to get that sniper entry. If you're like a day trader, you could just place your trade right here also. This is kind of like what I did for the team, right? Just place your trade here, your stop loss, and you're targeting up here, right? And you could just place your trade and just let price play around here, right? Play around here. But for me, I just like to scale down on the lower time frames just so I can see the best entry and just get like that sniper entry. So I'm gonna scale down on the 1 minute time frames and let price develop inside of this 30-minute zone right here. And now on the 1 minute time frames, we see price push down lower, and like the first thing I kind of look for is for price to fill in that the 50% of these zones to then extend higher and give me a internal range structure break. That's kind of like the first like sign of accumulation, right? When I'm trying to get my perfect entry, as you can see right here, like that sniper entry, right? When I'm on the lower time frames. So once price push down and mitigates my zone, as you can see, all I'm looking for is for price to extend higher and give me a lower time frame market structure shift. So as soon as I get this shift right here, this is my lower time frame shift, MSS. I'm just gonna put this on top, right, and left. But yeah, once I get this market structure shift, I have a new zone, right? I can just grab this new order block right here, place my trade right here. I'm live with the team. Boom. Stop loss down here. What do I target? These old highs right here, right? I'm getting way more RR with this right here. I'm getting way more confirmation because price already mitigate the 30-minute zone, and now I got this market structure shift. I'm more confident inside of this trade. I could just place more contracts here because now this is the confirmation entry. Let's say price pull back, tap me in, and boom, right? Always place your stop loss at these old lows too, right? Because this is like the strong low. With every new breakup structure, price is gonna respect the old low. If you're like trading forex, I would say give yourself a bigger stop loss just because of slippage, right? So price don't just slip down, you take you out and then just extend higher. The price action may be a little bit different for forex, but it's the same exact thing, right? Price came back, mitigate my zone, my breaker to then extend higher to fill in, right, that 30-minute fair value gap. Let's get back up to the 30 minutes. Perfect, right? As you can see right here, clean. Let's go on to 15 minutes. Perfect. Price came back, mitigate that 30-minute IFBG to then extend higher, to fill in that zone right. This is it. I hope you got a lot of value out of this video. If you want the full PDF of this exact video, click the first link in the description and join the Spark Trading community, where you have access to a full library and a full trading course of me and my brother Arkham Trades, of all our PDFs and our free trading course where we go over this complete concept. Make sure you like, subscribe, and comment down below any video suggestion or what do you think of this video right here. I love all of the feedback. But this is it. Spektrades out.